on the cards?
Yeah, well, it could be. I think, as Peter mentioned, it's only a slight improvement over the offer that's on the table from Leighton at the moment. And yeah, I mean, MacMahon do want to get rid of this construction business. If you have a look at the earnings for MacMahon, this construction business has been a weight on its earnings. It has been an underperforming part of its business, so I'd be happy to get rid of it. And there's been a lot of speculation that MacMahon as a whole would be a takeover target. And if they did actually sell off this construction business and did become a pure play mining contractor, it may well actually increase the attractiveness of MacMahon as a takeover target, particularly within that sort of miners services and mining engineering space. So yeah, I think this will certainly be seeing further developments within this story.
Where do we look on our market today? Is it going to be outside of the Aussie dollar? Is it going to be those mining stocks?
Yeah, well, the mining stocks generally are the biggest, see the biggest reaction to data coming out of China, particularly to do with imports and exports. And I think this data is expected to be pretty good today. A $20 billion surplus, exports up 5%, imports up 3%. But I think the imports number will be closely watched, particularly by the market and by the miners. Certainly they'll be looking at the levels and what the makeup of iron ore in terms of imports are there, because we have been talking a lot about this soaring iron ore price at the moment. And I think we're seeing pretty low inventories in China in terms of iron ore and steel at the moment, and that's supporting a run up in this iron ore price. And many have questioned this rally and saying that it's not going to last for a long time, it's not going to go any further. But you're seeing some bullish calls around the market now calling that it could go to $170, and I think the iron ore price could hold up at elevated levels a little bit longer than expected. Usually you see some seasonal strength in early spring in terms of iron ore imports, and certainly with the timing of the new supply and increases in supply of iron ore, mostly in the second half of 2013, you could see these sort of elevated levels hang around until possibly mid-2013, but it really is hard to tell at the moment. I think this will be an interest in terms of that Chinese data today. Certainly it might impact the miners, but I think it will also impact the Aussie dollar most.
In terms of some of the miners, the market doesn't seem to believe in the iron ore price, at least these levels being sustainable. I mean, you look at the movements in their share prices, and look, if it's not negative, it's certainly not huge gains at the moment. Last week was a different story. At the moment, look, Rio's up 0.2%, as is Fortescue. Atlas up about 0.6%. Is that more positioning, do you think, Tim, ahead of these numbers?
Well, I think it's definitely right that the market seems to be looking through the iron ore price at the moment. As I said, I think people are not expecting this price to remain around. And you look at some of the big iron ore miners, a lot of these iron ore contracts are longer term contracts. So a very temporary spike in the iron ore price probably won't flow through to a huge amount of impact on earnings. You need to see that iron ore price to remain at elevated levels for a decent amount of time for it to really flow through to earnings. But I think even the calls of $120, $130 a tonne for iron ore still remains positive for the companies such as BHP and Rio, who dig it out of the ground for cash costs of something like $40 or $45 a tonne. Fortescue's costs are a little bit higher, especially once you build in the total costs, including their debt servicing. But I think the market at the moment, you can't expect these iron ore miners to go up in a straight line. They've had a great run, so a little bit of consolidation in the share price.